Alright, so in this video we're going to discuss the trade that I've took inside of the 25th of July 2024, in which I predicted every 1 minute candlestick. But before we get started, I just want to tell you who I am. My name is Alin, and I've been documenting and predicting the Nasdaq since 2023 and on to 2024, and I plan on doing it for as many years as possible until I cannot mention the years anymore. The reason why I make these videos is specifically for my documentation. So I use these videos for the sole purpose, or not sole purpose, but one of the reasons why I make these videos is because I document my journey, and I again like to do it for a very long time period, because I would like to perhaps see ICT, because we all know ICT. I would like to see ICT's progress on YouTube. That was one of the reasons why I started this documentation. Another reason why I upload these videos is because I perhaps, and I will make some mistakes, and I want you to not go through them, and I want you to not have the same mass mindset which leads to failure, because all of these people, what they're promoting is just the lifestyle, and they never talk about any chart. This is the reason why I did these videos. Now, going into the video, and I want to emphasize that these videos are completely non-edited, because I do not really have the time as a trader, as a full-time trader. I do not have the time to edit these videos. So this video is going to be non-scripted, and if you have no attention span, and this is perhaps the second minute, I want you to leave this channel, leave this video, and never come back, because I make videos for the people who truly want to learn the full detail of ICT trading, the full detail in terms of psychology, in terms of the charts in itself, in terms of everything, the full detail. So, coming into this trade, in the left side, what we have currently is the 4-hour chart. The right side, what we currently have is the 1-minute chart. But I want you to understand this. Before I even open up a daily chart, before I even open up a 4-hour and a 1-hour and a 1-minute chart, I want you to understand very plainly that everything is absolutely anticipated before we even begin the week. Because my trading model, if you want to call it a model, but my trading process is highly based on the higher time frame premise. The reason why I do this is because when I was looking at these 1-minute charts, and I would have seen a 950 to 1010 or some form of market structure shift after some form of level of sell side being taken or some level of buy side being taken, I would have saw that beautifully. But then the market would have just not used that shift. And I would wonder, why? Why doesn't this work? Why doesn't this work? And I would just get lost inside of these lower time frames. The reason why I was getting lost inside of these lower time frames was because I would not put a price on this lower time frame, not lower time frame, but higher time frame analysis. So most of my time is spent understanding the weekly candlestick, and then from that weekly candlestick, after I know the direction, I will then understand, based on the high impact news drivers, which days I am going to trade. Not perhaps, but for this current week, we had no major high impact news driver. And when I say major high impact news driver, I mean NFP, FOMC, CPI, and those are the primary news drivers, and also a bank holiday. These new drivers, and I meant to say news, these news drivers, what they do is they tell me when not to trade, when the market is going to be problematic. And based on knowing when not to trade, I know which days I'm going to trade. And for this week, because this was a normal week, I never wanted to trade Monday. I would only trade on Tuesday, Wednesday, Thursday, and perhaps Friday's AM session. Another thing that I used to tell my students, and I still perhaps adhere to this rule set, but I've gotten better, and you can already see how this elongates. But I want you to get the full detail. I want you to get the full video, non-sugar coated, non-TikTok mindseted video. I want you to get the full amount of detail from this video so you can get the maximum amount of value. For this particular week, what I used to tell my students, and what I still tell my students, because perhaps they might not be as advanced currently as me, and by the way, if you want to join my mentorship, because I have an active mentorship, you can do that by DMing me on Telegram, but let's leave that to the side. If you are looking for the weekly chart, and you have a high time frame direction, you are only going to look for trades within that direction for the entirety of the week. This rule set allows me to see the market only on one-sided and to trust and to be fully confident, because I've did most of my analysis inside of the weekly chart and the daily chart. Based on that analysis, this concept allows me to be fully confident into looking for the market to the upside or to the downside, and it will allow me to go specifically to one session, to master one session, which I believe is the most important thing when it comes to ICT trading, because most people would want to have more sessions, but more is absolutely less, and less is actually more. Because, let me just make a quick phrase here. When you actually have all of your focus onto one session, understanding its characteristics, understanding the time in which the market mostly reverses, understanding all about the, let's just say, AM session, all of the focus is going to be on the AM session, and you're going to have more qualitative focus into understanding the AM session. And coming back to our original point, when I look for a weekly direction and I deliberately choose to not trade the days in which I understand that the market is going to be problematic, and I understand that the market indeed finished the manipulation of the week, because I understand the weekly accumulation, manipulation, and distribution, which is open, high, low, and close. And it's better that I have a face cam now, because I can now show it like this. And I hate scripted videos. But accumulation, manipulation, distribution, when the market does the manipulation, then what we're going to do based on this trading mindset is we're only going to focus on the distribution, and we're only going to see confidently all of the institutional order flow signatures in one direction. So for this current trading environment that we're looking at, I was already anticipating the market to go to, in this session, to the upside, but for the weekly candlestick, I was anticipating the market to go to the downside. But once we went to the downside and we fulfilled that objective that I was looking for the week, I understand, based on the accumulation, manipulation, and distribution, when we go from the low of the week to the closing price, that is what I was looking for in terms of the weekly chart. So for the weekly chart, I knew that the market opened, it went higher, creating the high of the week, and then we went lower, and I assumed that the low of the week was about to be made on Thursday or Friday rather. So what did I anticipate? This was a bearish week, but my premise for the AM session was to the upside. The reason being is because, again, I was anticipating the market to form this low and then to retrace back and to have the closing price. So this, my friends, is what I was anticipating the market to do between 9:30 and 12 o'clock, the AM session, which I solely trade. I solely look at the AM session because you're going to see inside of this review, inside of this trading video, why I solely focus on one session, and perhaps to get you to do the same, because again, it allows you to be fully excellent in terms of what you see in the marketplace, and it allows you to be more efficient with your focus and with everything. So let's just get into the video. So if you're looking at the 15-minute chart right here in the left side, based on the premise that I've said in the beginning of the video and until this point, based on understanding that the market is going to go to the upside and create the low of the week and to go back and close into the closing price, what I anticipate from this session, based on seeing multiple candlesticks to the downside, 1, 2, 3, and this is a 15-minute chart, what I anticipate between 10 o'clock to 12 o'clock is for the market to reverse. Now, because I solely focus on one session and I know its very characteristics and I understand how this session moves most of the time because the price is algorithmic, what I will do is I will wait for the right time and I will correlate my 1-minute chart with the 15-minute premise inside of the hourly premise, inside of the 4-hour premise. Everything is also based on the accumulation, manipulation, and distribution. 4-hour, 1-hour, 15-minute. And also the institutional order flow signatures, which I'm going to talk about now. So what I was seeing here, because I was anticipating the market to go to the upside, to take out these highs, I was anticipating this current candlestick that we're trading in to be the second, not the second, but the third candlestick of a swing low. So when the market was trading here, this is the first candlestick, the second candlestick, and the third one. As you can see, the market opened, it went into the 75% of this tail, which is a sign of strength, and then what we did is we went to the upside. And based on my daily premise, this is now allowing me, not right now because the candlestick hasn't closed yet, but this allows me to understand that we're going to begin a reversal. And by the way, instead of the 10 o'clock to 12 o'clock time period, the time period is the first thing that you have to worry about or that you have to keep in mind. So what we saw based on that inside of the 1-minute chart was the fact that the market closed above this inversion fair value gap, and we went into the 50% of this order block. Now, knowing that we want to see the market go into this level, the weekly busy low, along with the previous PM session buy sell liquidity pool, based on understanding that, we now are going to see the market only in one side. So market closed above this inversion gap. What does this mean? This means that the market is going to go down, use it as a means of support, and then we're going to look for higher prices. Market again closed above the 50% of this bearish order block, and this will now become an inversion order block. Every singular level, every singular PDA can be used as a means of inversion. And if you're wondering what this big blue box here is, this is a daily busy. So for this daily busy, this dotted line right here, this dashed line right here, this is the 50%. For the next level, because we know that we're going to go to the upside, I will look for the 75% level because we closed above the 50% of this daily busy. So instead of this candlestick, what I'm looking for is for the market to create a swing low here, to attack this pull of buy side, to close above this inversion gap, to go above these ones, and to use these levels as means of inversion. And also in the 15-minute chart, the absolute same thing. So I already know in which direction I should trade. I already know which signatures I should see based on the premise, and I'm going to stick with them. However, if 3 PD arrays fail in this current narrative, then what I will do is I will just close the trade, or I would cancel out my idea, and I would just stay on the sidelines without any opinion. As you can see, order block. I'm looking for this to become an inversion. I want to see the market close above this one with speed and perhaps use it as a means of support. But if it doesn't, then this would become right now a breakaway gap. And by the way, this was done live, which is exactly what I wrote here, because the market went back. And for my mentorship students, this is a propulsion block. So after a propulsion block, I gave you the rule set to the propulsion block and the fact that it would make a breakaway gap. Right here, I was already annotating the 15-minute order block, and I was anticipating this candlestick right now to actually form the swing low here. And if the market would have formed the swing low here, then I understand that this low does not have to be taken until we get to this target. And I love that the London lows between 2 o'clock and 5 o'clock have been taken, because this is exactly the model that we teach inside of the mentorship. So right here, if I were to not be so sure inside of my analysis, this was a high probability trade idea, but if I wasn't so sure, and if I monitor the price action, what I would constantly measure in this moment when we have the market retracing back into PD arrays, into bullish PD arrays, I measure every bullish PD array and I see whether they fail or not. And I only allow 2 PD arrays to fail. If we get the third one, which in this case would be this order block, if the market would have even went to the 50% of this order block, because as classification, this is a propulsion, I would close the trade if I were in a trade, or if I was in a trade, or I would cancel out my bullish idea and I would just stay on the sidelines. Right here, I'm annotating a 1 minute fair value gap. I'm waiting patiently for the market to close that 15-minute candlestick. And my entry point was the inversion fair value gap. Right here, I did a mistake. Instead of taking the stop loss, I took the take profit and I put it below. So the position closed by itself, and this was a mistake. And this was a mistake to perhaps show the level of tiredness, the level of how unfocused I was. I mean, I was not unfocused, but like I was not 100% focused inside of this trade, and this will be later on materialized into me closing the trade prematurely because of this exact reason, because I was completely, not that I was completely unfocused, but I was not 100% focused, and I would rather close the trade and completely miss the move. And if this was a live setting, I would, because everything is in a demo, I would miss the move and I would just stay on the sidelines, because if I would just leave this and the market would have came back into my stop, I would then blame myself. As an adversity, I would blame myself that I knew that I shouldn't trade when I'm not fully focused based on rule sets, and that would hurt even more. So that would hurt more because that is an actual mental capital loss than me missing out a move, which is nothing. So I would rather either take a small stop loss or some form of break even or a menial profit. I would get out and I would just look at the market and I would cheer myself inside of my journal. And by the way, the journal is the most important friend, the most important fan that you can have. Right here, we beautifully saw how the market went back into the inversion gap. We also created an immediate rebalance here, which is the most important signature inside of price action and is the strongest signature inside of price action. And we also opened the new 15-minute candlestick. And we also want to see the market close above this 15-minute inversion gap. Everything I'm talking about here was inside of my head when I was trading, when I was looking at the market. So this is how I think. And you can now see, based on the multitude of these details, you can now see why focusing on one singular session is the best thing that you can do and is mainly necessary. Inversion fair value gap, this is what I'm looking at. I also know that the market does not have to go below this low here because this is an intermediate term low, because the market went back into the fair value gap, made it efficient, and then we rebalanced this price range by going above it. So the market has fulfilled the purpose of rebalancing this imbalance. I also do not want to see the market go below the current low inside of the 15-minute chart. And right now, as we closed above the 50% of this inversion gap, I want to see the market use it as a means of support, correlated with this order block. And same thing here, inversion gap, order block, we can see this as means of support. This whole entire breaker, we can look at the 50% level. And I actually wrote Reaper here, if I'm not mistaken. Alright, so this was the first thing that I saw as problematic, because exactly as I told you, I wasn't 100% focused. I wasn't 100% dialed in. And even though I saw all of these signatures after, and even though I saw all of these signatures before, I wasn't at my 100% that I know that I can be. So I was looking out at the 4-hour chart, as you can see right here, and even though I've had all of my daily buys correctly, and I understood that we perhaps might have had the highest degree of probability of creating the low of the week, and we're trading instead of the low of the week, I saw this movement to the downside and to the upside, where we deliver to the upside, which is buy side delivery, and then sell side, which is sell side delivery. I saw this as a potential balanced price range because I was unfocused. Not unfocused again, because I have to be careful with the words that I say. And you have to be careful with the words that you say because they remain inside of your head, but that's another discussion for another day. But I saw this and I was thinking, and this is the real adversity. This is real trading, right? I'm here to show you my mistakes. I'm here to document my journey. And this was also after a period of break, a period in which I wasn't focused on the markets. So I was also getting the hang of the market. So perhaps this is the reason why I was not focused in the first place. But what we're looking at here, what I believed I was looking at here, was a balanced price range. And I was thinking that the market would just consolidate because we've moved a lot throughout the entirety of the week. So we perhaps could have anticipated a consolidation throughout this session. So that is why I will, as you can see right here, instead of this current candlestick, what I did is I closed the trade with the idea that I've told you in this last 2 to 3 minutes. So right here I was down to just look at the market to understand what the market is going to do, and this was the tape reading that I interpreted. So the market closed above the 4-hour tail, which is not seen in this chart because this is a 1-hour chart now, but the market closed above this constant encroachment of the tail. We went back into the order block. We created a swing low here, closing above the 50% of this order block. We've also closed above this one and above the constant encroachment of the wick, so we want to see the market go to the upside and use this as a means of support. The market also traded back inside of this order block, so I want to see the market, instead of this candlestick or the next two, go higher above them with speed. Right here we saw this as a means of repo inversion. I would like to see this as a means of breakaway gap, and this is after the fact, this is after the trade. So exactly what I wrote down here. This is why. The main reason is because we are trading is out of an expansion. So the market has done the retracement and now we're going into an expansion. My mentorship students, you know what I'm talking about. This BPR-DRE, or DRE, the Romanian itself. This BPR-DR means BPR dealing range. So I do not anticipate the market to come back into this dealing range. That's what it means. I was looking at the 50% of the sale. The market went below it. Now I'm looking at the high, this fair value gap. And what is in my mind is that I want to see the market use the 50% of this order block as means of support. And I also see this as a high that will be taken in the next candlesticks with speed. And the market will close above this Reaper and it will leave this open once we close above it. So you can already see how I think ahead, and I just see this as a means of retracement because we closed beautifully above the 50% of this fair value gap. We closed above it. We also closed above the 4-hour tail, also on a 15-minute chart, and that is significant. So what I want to see inside of the 15-minute chart is for the market to go to the upside with speed and use this as a means of support. So I would only want to see the high of this fair value gap as means of support, leaving the 50% open, which would indeed make this as a means of breakaway gap. You can see how the market closed above this Reaper. Right here I'm looking at the institutional order flow entry drill, which is just a partial entry into a fair value gap. So I'm only looking for the high of the fair value gap, and then also this order block, or this one, because I do not know whether this is an up close candle or down close. Right here what I wrote down is that I'm content with the tape reading exercise, and I exited prematurely due to anticipating consolidation, exactly what I pointed before. And right here, my trade idea would have just gotten the full take profit, because normally this is what I do. I exit at the first take profit that I would normally have, and then I just leave. Perhaps, I mean, I do not do this right now, but I would just leave if I were trading size. If I was trading a lot of size, I mean, saying contracts or 12 contracts, if I was trading that size, I would just leave like, I don't know, 20% run into those levels only for my satisfaction as a trader, as an analyst, to pay the analyst that he did a great idea. He did a good job and he had a great idea. And right here you can see how beautifully, as we hit that target, we would have been out, and we wouldn't have to deal with all of this retracement stuff. And instead of this current range that we're looking at, if we were to have to either confirm or deny our narrative, the first PDRA that I would see as a means of wanting to see the market go to the upside from is this one here. The second would be this order block, and the third would be the fair value gap and the 50% of this order block. So if the market closed below this one, then I would never anticipate the market to go to the upside, and this would be my last line of defense for this current idea. So my stop loss, if I was indeed in a trade, would have been at the 50% of this fair value gap. Because as we've taken a means of liquidity pool, we now can expect the market to retrace. But looking at the 15-minute premise, we can see how this is obviously going to the upside. Order block, let's see how this goes. 50% of this order block. And this is also a new 1 hour candlestick. So I'm looking at the accumulation, manipulation, distribution of that. Fair value gap here. The first one, we close below it. We use it as a means of resistance, even in this idea to the upside. So this could have been actually a model instead of the 5-second chart. The market goes below this level of sell stops. And what I wrote down here and down here is that this is an intermediate sum low, exactly what I told to you before. This is an intermediate sum low because the market went back into the fair value gap and then left it, leaving this as a means of balanced price range. This is why this is a balanced price dealing range. And if the market would have closed below the 50% of this, then I would cancel out the idea, and instead of my trading idea, I would just get stopped out, because if the market would have closed below this order block, then it would have been used as a means of resistance, and then the market would have reached this anyway. So for my PDRA, I'm looking for this 1-minute Reaper inversion gap high, 1-minute Reaper inversion gap low, and I also look for the immediate rebalance inside of the 15-minute chart. And I'm also looking forward to this leaving a breakaway gap. So if I want to see inside of the 15-minute chart that this is a breakaway gap based on a signature that I've studied for a long time, then what I anticipate is for the market to only go back into this high. And this is a breaker because we have a low, a high, and a lower low, and then I anticipate the market to go to the upside. Fair value gap, I'm looking at the 50% of this too. Exactly what I wrote down here, 50-minute breakaway gap. I was anticipating for the market to create this as a means of immediate rebalance and to leave this little small portion here open, because what I believed was we did the job to create the immediate rebalance here. And right here, what I was pointing is that I was anticipating one candlestick to go and close at the upper quadrant of this breaker, or literally above it. And right here, after this 1 minute candlestick, this I knew that the market is going to go inside of the AM session buy side. And this was the trade. I would put this inside of my journal, and this is what I did. And this was the trade idea. I hope you guys enjoyed this reading. And don't forget to join our free Telegram, which is in the description below. You can absolutely join for free. That is a place where we discuss these exact trades that I take. We discuss them in depth. We discuss about psychology and trading psychology. And this was the video. I hope you enjoyed this one. I'll see you in the next one.